Welcome to this session on financing a sustainable ocean economy at the 7th OECD Forum on Green Finance and Investment. My name is Anthony Cox from the OECD Environment Directorate, and I'll be moderating the session today. And we're very fortunate to have with us a stellar panel to tackle the issue of ocean finance. Now, this is an issue that has been garnering increasing attention as the public outcry over the mismanagement of the ocean has increased massively in recent years. Marine plastic pollution, waterborne pollution from land-based sources, unsustainable fishing practices, unsustainable tourism practices, pressures from resource extraction for oil, gas and minerals. All of these pressures are adding to the challenges around ocean finance and how we manage our oceans going forward. Now, addressing these challenges, protecting the health of the ocean while meeting the needs of the billions who depend on it for their livelihoods, will require fundamental changes in how finance flows to ocean-related economic and conservation activities. Growth in ocean investment, especially in times of recovery from the COVID-19 pandemic and the ensuing economic crisis, will not be sustainable by default. We have a major challenge in redirecting finance and investment so that we build back bluer and do not encourage short-term focused and environmentally destructive activities. The challenge is really significant and requires scaling up investment in sustainable ocean activities and reallocating capital away from harmful or unsustainable activities. Now, two recent OECD reports tackle this issue head-on. A new policy paper on reframing finance and investment for a sustainable ocean economy was launched today, and there's a copy here, which is difficult to see in the thing. And that is a companion piece to a major report that we released last month on sustainable ocean for all, harnessing the benefits of sustainable ocean economies for developing countries. And I'd encourage all our listeners to have a look at these reports, which you can find on the OECD Sustainable Ocean portal. So before we turn to our guests, our panelists today, let me remind viewers that they can participate in the session by sending questions in through the system, and we will do our best to get the panel to address them in the discussion period in the last half of our session today. So without further ado, I'm very pleased and honoured to introduce an old friend of ours in the ocean world, Ambassador Peter Thompson, who is the UN Secretary General's Special Envoy for the Ocean. And Peter will be providing us with some opening remarks that will help set the scene for today's discussions. Peter, the floor is yours.
Thank you, Anthony. Give me a thumbs up if you can hear me. Jolly good. Okay, ladies and gentlemen, all courtesies observed, and many thanks to the OECD for organizing this session and giving me the privilege of addressing you all today on a subject that has in recent years assumed such vital importance in world affairs. These days, use of the word vital is often either imprecise or hyperbole, but not so when it comes to the subject of financing a sustainable ocean economy. Allow me to quickly illustrate that point. My hometown in the South Pacific is surrounded on three sides by a coral barrier reef. That reef is our true interface with the ocean, and the protection it provides, along with its wide navigable passage, is the very reason our town exists in the first place. I thus find it incredibly difficult to imagine a world without coral reefs. That is essentially what the IPCC has told us will be the case once we go through the dreaded line of 2 degrees Celsius global warming. If that sounds extreme to you, I ask you to consider for a moment that current trends, as presented by the World Meteorological Organization, that's the weathermen and ladies in all our countries, they have us on a trajectory that takes us to around 4 degrees Celsius global warming before the end of this century. 4 degrees, double the level at which coral is gone. At the end of this century, if she's spared from all the Malthusian onslaughts of pandemics and wildfires and superstorms, my granddaughter, who is here in the house with me, Rose Thompson, will be 80 years old. The climate crisis touches all our lives. Yet, as the Secretary General of the United Nations, Antonio Guterres, put it in his speech at the Blue COP in Madrid last December, we are knowingly destroying the life support systems of this planet. That being the reality of our times, why then is the subject of financing a sustainable ocean economy so vital? Well, those of you who attended the UN Biodiversity Summit last week might have participated in the high-level side event organized by UNDESA and my office on the ocean's role in biodiversity. If you did, you'd know that the main outcome of the event was the firm conclusion that in any global discussion on biodiversity's plight, the ocean must be front and center. Why? Because the ocean hosts the great majority of biodiversity, in other words, life on this planet. As we know, the ocean's health is in deep trouble, principally due to our burgeoning levels of anthropogenic greenhouse gases, but also to our long-standing harmful fisheries practices and policies, and our wanton destruction of natural habitats, and our unconscionable levels of pollution. To reverse that decline in the ocean's health, we have to implement SDG 14's principles of sustainability, which are at the heart of those principles is the sustainable blue economy. Ladies and gentlemen, we can't have a healthy planet without a healthy ocean. That is why financing a sustainable ocean economy is of vital importance to us all. All relevant studies show that enabling the required financial flows into sustainable coastal and offshore projects will turn the tide on the destruction of life in the ocean, thereby giving our children and grandchildren the environmental security we want for them and those who follow. Ladies and gentlemen, something I find very rewarding is the way that the sustainable blue economy has come to the fore in recent years. I think back to the highly successful Sustainable Blue Economy Conference hosted by the governments of Kenya and Canada and Japan in Nairobi in 2018, and the influence that that African conference had on global developments. I think of the OECD's steadfast commitment in recent years to the development of the sustainable blue economy through the holding of special events and the production of a series of excellent reports, such as the two informing us today, as Anthony mentioned, but I'll name them again: Reframing Financing and Investment for a Sustainable Ocean Economy. And the other one, A Sustainable Ocean for All, harnessing the benefits of a sustainable ocean economy for developing countries. I think also of the expert work being done through the Friends of Ocean Action at the World Economic Forum and the incredible outreach of the interactive ocean dialogues that they organized for the June week in which the UN Ocean Conference was to have been held this year, drawing thousands, tens of thousands of participants to such sessions as Building Sustainable Ocean Economies. I think of the great work being done to foster the sustainable blue economy by non-governmental organizations like the Nature Conservancy and the Bertarelli Foundation, Conservation International, and WWF. I think of the governments like that of the Seychelles that are fronting up with financial innovations like their issuance of the world's first blue bonds. I applaud the setting of global standards for the development of the ocean economy through such initiatives as UNEP-FI's work and the Sustainable Blue Economy Finance Principles, of which I'm sure we'll hear more today. It's also hugely encouraging to witness the ocean economy financing measures being established by the multilateral financial institutions, led by the World Bank's pro-blue multi-donor trust fund to support sustainable and integrated development of marine resources, along with the Asian Development Bank's $5 billion action plan for a healthy ocean and sustainable blue economy. I also applaud the incredible output of the high-level panel for a sustainable ocean economy. The steady delivery of expert reports from the ocean panel have raised the bar for ocean action, allowing us all to move to a new and more productive level. What I find gratifying is the way that all this work from all these institutions and organizations is converging on the same action points for development of the sustainable blue economy that, in my mind, are so readily attainable over the decade ahead. Offshore renewable energy, the greening of shipping, sustainable aquaculture, investment in sewerage and wastewater infrastructure for coastal communities, coastal and marine habitat protection, and underlying it all, comprehensive science-based marine spatial plans. The results of all this good work will be distilled next year in Lisbon at the UN Ocean Conference, and we will advance into the decade in which we expect science-based action to help us attain all of the targets we set ourselves in SDG 14's goal of conserving and sustainably using the ocean's resources. Who could not be confident that the era of the sustainable blue economy is now underway? So in conclusion, ladies and gentlemen, I greatly admire the foresight and perseverance of the OECD in its organization of the annual Green Finance and Investment Forum. I also admire the keen insight evident in their selection of the members of the panel you're about to hear from. And I thank them for the courtesies that they've always extended to me so often in Paris. All I ask of them today, on the ocean's behalf, humbly, but in the light of the logic of our times, is that our hosts find a way to retitle this annual gathering to be the Blue-Green Finance and Investment Forum. For I say again, no healthy planet without a healthy ocean. And I thank you for your kind attention to my words and look forward to hearing from the panel. Thank you, Anthony.
Thank you very much, Peter. And those are certainly inspirational words to open up our panel today. And it's very encouraging and to see that there are so many areas of action, so many points of action, and that you feel they are converging towards a common purpose, which is very encouraging. And I will take your suggestion for the renaming of this forum to the powers that be, and I will advocate as strongly as possible. So, colleagues, we now turn to our panel discussion, and as I mentioned at the outset, we have a stellar panel drawing on from various dimensions of the Ocean Finance Network, all of whom are steeped and in different dimensions of the ocean finance challenge. What we're going to do now is we will have a first round of questions to our panelists, and I'll introduce them one by one and then ask them a question as we go through. And then we will come around for a second round of moderated discussion, and then we'll open up to questions from the audience. So I would reiterate our invitation to those members of the viewing audience to please send your questions in. So let me turn first to our first panelist is Dr. Safri Buranuddin, who is the Deputy Minister for Indonesia's Coordinating Ministry for Maritime Affairs and Investments. Now, last year we had the honour of partnering with Dr. Safri and his team in a regional ocean policy dialogue in Southeast Asia. Dr. Safri joined us for the discussion and highlighted the fundamental role of leadership in moving the needle forward on key aspects of a sustainable ocean economy. For example, Indonesia's ambitious target for plastic pollution reduction. So, Dr. Safri, I'd like to ask you first. Addressing a challenge of this scope requires finance and investment, obviously. Can you tell us about the steps that Indonesia has taken in this regard? So I'll hand the floor to you, Dr. Safri.
Thank you, Anthony, and your introduction, and thank you, Peter, for providing the information about the ocean economy. I just want to let you know about, we have now what's called the program is the program of ocean prosperity. And as you know, what is the ocean prosperity? That's part that when we call it the ocean prosperity, we are thanking also for the World Bank team and ADB team. We discussed about this concept we want to apply for the, this is our objective for 2024 until 2024. If you see here, the Indonesian archipelago country with enormous marine biodiversity, import resource, food security, livelihood, carbon sequence, and blue carbon, and transportation. It is a source of comparative advantage for a sustainable marine and coastal economy. I want to say this ecosystem and the economy they support must be preserved by overcoming current threats and challenges, including coastal degradation, climate change, unsustainable aquaculture practices, overexploitation and marine pollution, such as plastic debris and solid waste in waterways. Ladies and gentlemen, Gross domestic product summarized the size of an economy, representing the total value of certain goods and services produced. However, GDP leaves out important detail when it comes to ocean economy. How does the ocean affect local community and individuals? How does economic activity damage or improve the health of ocean ecosystem? These knowledge gaps limit our ability to make effective, inclusive decisions about how we use the ocean and build a sustainable blue economy that can deliver on the national ocean agenda as well as 2030 agenda for sustainable development. An integrated and multi-sectoral blue economy strategy is in this presentation about ocean prosperity. And I just to let you know my share screen, please. It is possible. The host, I want to share my one slide, please. Ocean prosperity, or what in Indonesia we call it Lautan Sejahtera, is the key to improving marine and coastal activities, equal opportunities and livelihoods. Fisheries and coastal tourism are the most significant sector to develop and transform based on foundation of healthy and productive marine and coastal ecosystem, including marine plastic pollution, reduction, and marine conservation. This is Indonesian commitment. Fundamentally, a blue economy strategy enables government to monitor and manage three critical trends with respect to the ocean economy. One is change in the ocean wealth, including mangrove, seagrass, and coral reef. The second is distribution of ocean-related income among different group of people, including income from fisheries or tourism for local communities. And third is the contribution for the ocean-based economic activities. So in the objective of LAUTRA, or what's called the ocean prosperity, first is improved management of fisheries and coastal ecosystem. In target, we call it in VPP or area fisherman management, improve the livelihood of target coastal community. We have activities for sustainable product fisheries. The second, improve livelihood for coastal community. Third is coastal and marine ecosystem resilience. And fourth, program management enabling fisheries management. If you see here, that means the government of Indonesia has ambitious midterm goals for the fishery sector. This is our president priority project. First, to double seafood export value to 8.2 billion by 2024. The second, to ensure fish catch is within biological safe limits. And the third is to increase fishers' income by 10% per year. So, LAUTRA, or Ocean Prosperity, aims to increase value added of Indonesian seafood in high value market by improving seafood product competitiveness through improved production cost and quality, certification and traceability, and by reducing threats to fish supply and fishing productivity, overfishing, habitat destruction, and to increase fisher income by eliminating barrier to business. We are locals in three area management fisheries in Eastern Indonesia. And our conclusion that the coordination Ministry of Maritime and Investment Affairs and other stakeholders look forward to increasing cooperation and collaboration to develop our ocean economy with equal opportunities, and look forward to positive global trends to position Indonesia ocean economy for sustainable growth to come, especially after the COVID-19 pandemic. Thank you.
Thank you very much, Dr. Safri. And I think the title of the Indonesian program, Oceans for Prosperity, really does resonate with the current situation today, where in the recovery from the pandemic, there is as much as focus on economic growth as there is on social dimensions of the recovery and on making sure it's a green recovery or a blue recovery. We will we'll certainly come back to dig a bit deeper into the ways in which Indonesia is meeting these challenges. I might turn now to Vidar Helgesen, who is Norway's special representative for the ocean. And Norway, as Peter Thompson indicated in the opening there, is the co-chair of the high-level panel for a sustainable ocean economy. Now, when the panel was convened, the world looked very different than it does now, that's for sure. So as we're approaching some 8 months of dealing with the COVID-19 pandemic. Countries really are faced not just with a health crisis, but also one of the worst economic crises seen in a century. So attention suddenly being diverted away from what used to be the super year for the ocean. So how is the high-level panel, which is comprised of world leaders, reconciling the needs to advance on ocean sustainability while also trying to rescue their economies from collapse?
Well, thank you, Anthony. Actually, that very question was essentially the question that we started out asking ourselves, and that the 14 heads of state and government on the panel started out asking themselves, with the exception of the COVID part. Because it is ensure the regenerative capacity of the ocean and ensure production and prosperity from the ocean. And I think in terms of the theme of sustainable ocean finance, I'd like to point to three things. One, the first is that we need more awareness of the fact that investing blue can serve green, and that in some cases we actually need to invest more in ocean industries and ocean businesses for the sake of green. The most evident thing is fish and seafood. There is no way that the world can feed a growing population over the coming decades by continuing to literally beefing up agriculture-based protein production. We need, and we can produce within nature's boundaries, much more food from the ocean, existing and new kinds of food from the ocean. And that will serve not only the ocean and the ocean economy, but it will serve planetary purposes. And much the same can be said for clean energy from the ocean, greening shipping, nature-based solutions from the ocean, whether it's seaweed in the northern hemisphere or mangroves in the southern hemisphere. So there are actions that we can take, and the tremendous research being done for the Ocean Panel underpins this. There is a lot we can do that will serve climate action, that will give biodiversity benefits, that will create jobs, more resilient coastal communities, and national economies. And coming to COVID, not only in the long term, there are things you can do and invest in now that will yield immediate jobs benefits along the world's coastlines and help more long-term purposes as well. There's actually a separate report out from the high-level panel, commissioned by the high-level panel, on how the blue economy can help boost post-COVID recovery. My second point is what you alluded to and what's also referred to in your policy paper. Much of the current ocean economy is not sustainable, but it can be. We need to make that turn. There are multiple uses and multiple businesses in and with the ocean. There are multiple environmental pressures on the ocean, and there are cumulative effects of these pressures. Now, many of these activities are compartmentalized, but the ocean is not compartmentalized, and that's why we need to take a holistic and integrated approach to ocean management. We cannot allow sectors any longer just to drive their agendas. Governments need to put in place integrated ocean management. They need to put in place marine spatial planning to take that overarching, responsible look at the ocean. And that's my third point. Planning might not sound very exciting, but planning is really the basis for good management of the oceans and for attracting investments. If you go to potential financiers and investors and you don't have a plan, they're going to ask you for that plan. So governments should start by planning for the overarching management of their ocean territories. That could then be the basis for sustainable sector plans, the basis for good sustainable business plans that could help attract investments and serve planetary purposes as well. As part of that, obviously, you need the right regulatory frameworks, you need the right taxes to incentivize a drive in the sustainable direction. And finally, I would like to say that a concept that we need to put more attention to for the ocean is the concept of natural capital accounting. You know, the OECD is doing some work on that with other organizations. We know that for the future, much of what we need to live from when it comes to the ocean are living resources. And those living resources depend on us taking good care of them and capturing natural capital in the way we do budgeting and financing and management. So that's another concept that I think belongs in that planning framework. So taking a holistic view, ensuring good planning will eventually yield more investment in the ocean economy.
Thank you, Vito. And indeed, the call for better planning, while, as you say, it's not perhaps the most exciting or sexy aspect of the ocean challenge, it's absolutely essential to underpin sustainable finance. And indeed, that kind of certainty and better understanding of risks and opportunities is what the investment community, banks, investment managers, institutional investors are calling out for a lot these days. So, in fact, that's a good opportunity to now introduce Ingrid van Wees, who is the Vice President for Finance and Risk Management at the Asian Development Bank. And in 2018, the Asian Development Bank launched its Action Plan for a Healthy Ocean with a target of $5 billion to be spent from 2019 to 2024 on a range of priorities, including ecosystem management, pollution control, sustainable infrastructure, just to name a few. We have, and I'm sure Ingrid will be talking about the flagship Source to Sea Plastics Reduction Initiative, which began late last year in trying to meet the plastics challenge, which we all know is a major priority and a major challenge in terms of financing. So Ingrid, I was wondering if you could tell us how ADB and the other development banks have tried to push the envelope in terms of financing for sustainable solutions for the ocean in the Asia Pacific region, and you know, what are the challenges facing the countries in the region, and what can we learn from the countries in the region for other parts of the world?
Yeah, thank you, Anthony. I think you asked first how we push the envelope ourselves. Well, I first start with our organization, and then we'll see it's very similar for the countries we serve. We push the envelope through putting a spotlight on healthy oceans and sustainable blue economies internally by creating a dedicated initiative with an assigned dedicated team. Although the SDGs were launched in 2015 and SDG 14 was one of them, it didn't get much attention until we put the spotlight on it. And in addition, we set a very large and challenging 5 billion target and made a big public announcement at our annual meeting in Fiji last year. And yes, there was no way back. And we got the attention, and this started the dynamics. It really changed them. So prior to this, ADB was mainly focused on terrestrial sustainability. And although marine and ocean projects have the potential to contribute to a wide range of critical SDGs, such as poverty, gender equality, food sustainability, and climate change, it was a new world for us. And we needed dedication. So most of the MDBs by now have specific programs in place. Earlier was mentioned ProBlue from the World Bank Group, to mention as one, to drive ocean sustainability together. And I think it's interesting to realize that this is no different for the countries we work with. Without a clear focus, dedicated responsibility, and dedicated funds for ocean sustainability, it will be challenging to harvest the potential of this, in my opinion, extremely rewarding segment. And we've just heard from Dr. Mavri from Indonesia, but also in Bangladesh. These are exemplary countries that have already created dedicated departments for integrated ocean management. which is a very important part of addressing the issue. So after the launch of the 5 billion initiative, the next important step for us was to set the definitions and the standards and metrics for ocean investments. Given it's a new space, there was limited material available. And we will shortly launch our Ocean Finance Framework, which defines eligible sectors and indicators to manage the sustainability and the impact. This framework will be used for our own internal pipeline development and project screening, but it will also serve as a foundation for blue accountability and monitoring frameworks needed for blue financing instruments, such as dedicated trust funds, blue bonds, blue credits, and other innovative instruments. Then I get to the second part. What are the challenges for the countries to develop this segment? I just mentioned 3 challenges. Of course, there are many, but I just focus on 3. First of all is fragmented responsibility. Ocean management requires a holistic approach across blue economy sectors and across boundaries of many ministries. A lack of central responsibility for blue is complicating the development of integrated plans, which are so very much needed. Now, if we speak about financing, similar to a sovereign green bond issue, various governments' departments need to work together to develop a blue pipeline and to centralize the funding required for blue initiatives. Second point is access to finance. And blue finance is different than regular finance. It is different than green finance. We need to raise funding for blue initiatives that have a different level of profitability, maturity, and intrinsic risk. It will be financed for a portfolio of projects, which are all different. These different types of projects need different types of financial support, which can be achieved by blending funding for a certain transaction. In addition, the funds need to have a permanent feature that goes beyond the last elections, that goes beyond a certain government, to signal credibility and long-term dedication to attract and catalyze private sector investment and long-term capital from, for example, capital markets and commercial banks. And last but not least, the governments need funds that can be channeled to municipalities and local communities which have limited financial literacy and ability to raise financing themselves. Although, as we know, many of the projects relevant for the blue ocean, if we talk about wastewater management, pollution control, coastal development, are actually taking place in municipalities and communities. At the moment, they don't have access to finance. At the moment, some of these municipalities and communities are not even allowed to borrow. So ADB is working with governments to set up dedicated national trust funds and blue finance frameworks, which can raise a combination of commercial capital, grants, concessional capital, ODA from a varied range of stakeholders, such as DFIs, foundations, local governments and stakeholders, and private sectors. Now, these funds have different characteristics. Some is patient capital, some are grants, some is concessional. So they can provide funding to a wide range of initiatives. For example, some equity for innovations, grants for knowledge transfer through technical assistance, blue credits to provide revenue support similar to the feed-in tariffs for renewable energy, concessional financing, and, for example, credit guarantees to de-risk projects and encourage private sector participation. At ADB, we also have our first pilot was our own fund. We have raised for the ASEAN region, the ASEAN Green Catalytic Climate Fund, a ticket of over 1 billion from different ODA supporters based on these principles. So that fund can support blue projects of different kinds with a whole range of different financial instruments. Last but not least, I like to mention the lack of expertise, where a lot of technical assistance is required. One example of a lack of expertise is in the creation of an optimal mix of regulations, policies, and economic incentives. And of course, also disincentives to channel ODA, grants, state and private sector funds towards sustainable ocean investments. We need to find the right balance to shield existing industries while developing the new normal and the new industries we need for sustainable management. These regulations and policies need to include elimination of inconsistencies, distortions, and disincentives. So as part of our Source to Sea plastic initiatives, we are working with several governments in Southeast Asia to develop regulatory and policy frameworks conducive to plastic recycling and development of circular economies. Our 5 billion initiative is split between direct and indirect project financing and technical assistance. And this technical assistance is used to support knowledge development and innovation.
Okay, thanks so much, Ingrid. And there's certainly some themes emerging from the panel discussions so far. Themes around the need for planning, the need for stability, the need for indicators, measurements, standards, metrics. All of these are familiar. It's, your remark that the ocean finance is different. Blue finance is different to green finance. It's very interesting. I think we can come back and explore that a little more. And in fact, I wonder if Eric will pick that up in his remarks, because it's now my pleasure to introduce Eric Usher, who is the head of the UN Environment Programme Finance Initiative. And UNEP-FI, as it is known, is also the Secretariat to the Sustainable Blue Economy Finance Principles. Now, these were launched in 2018 and are touted as the world's first global guiding framework for banks, insurers, and investors in financing a sustainable blue economy. I'm pleased to note that the OECD is a signatory to the principles, and we are very pleased to be able to support them. UNEP-FI, of course, has a long history of furthering sustainable finance objectives in other areas of green finance. So I'm interested to hear from Eric how the blue ocean finance differs from the more established sustainable finance areas, such as for climate or biodiversity finance. What are the key lessons or challenges we can take from these other areas?
Great. Well, thanks very much, Anthony, and pleasure to be with you all today. A lot of the statements already made is, I would say, a little bit music to my ears in terms of getting a common understanding of how we create the environment to invest, but to invest responsibly. Anthony, you've mentioned that this initiative, the Sustainable Blue Economy Initiative, it was actually initiated by the European Commission, the European Investment Bank, WWF and WRI. We were not involved at the beginning, but as they launched it, they were looking for a home about where can we put this initiative to essentially to try to influence how you get mainstream uptake across the financial industry. And within UNEP-FI, we've been working for a very long time, essentially on establishing with the financial sector, the UN, norms for responsible conduct within the financial industry. The largest framework is the Principles for Responsible Investment. Many of you may know, more recently, Principles Sustainable Insurance. And then just last year, the Principles for Responsible Banking. I would mention that one because it marks, I would say, a change within the financial industry, how we've gone from simply establishing risk frameworks, so trying to understand the stuff we're doing is business as usual and where that might be creating negative impacts, social and environmental risks. And the shift now in the post-2015 world is going beyond that. That's the floor, but what it's really about today is more about aligning with society's needs as defined by the Sustainable Development Goals, the Paris Climate Agreement. So it's really not so much only about figuring out what you have to stop doing, which might be environmentally damaging, but really what role you play as a financial institution in contributing to shifts that society needs to make. Certainly the Paris Agreement would be the one that maybe is best known and an increasing number of financial institutions, banks, investors, and others are starting to look at this notion of net zero alignment. What does it mean for our portfolios? How do we start adjusting our portfolios over time? But part of the responsibility is to look in terms of us working with the industry, are on the horizon issues that they need to get to understand. And the blue economy, issues like plastics, people see it in their Facebook feeds. They understand that there's an important issue, but how they really integrate it into what they do on a daily basis. Well, as the earlier speakers have mentioned, there are a lot of gaps for a typical bank or an investor. Really just understanding what I do that impacts the transactions I do, how they link to the blue economy. We're at very early days. And I think you've asked and others have spoken about what's the link between green and blue. And I would also vouch for making this the blue-green forum in future. And I think this is a step in that direction. Certainly, maybe some would see blue economy as a subset of the wider green economy, but it very much has its own specific risk and opportunity parameters. And this distinction is very important. We need to really understand sort of the variety of ecological and commercial interests that are in the ocean. Ocean accounts for 70% of the Earth's surface. And while many traditional green finance approaches have focused on land-based industries, what we're often missing out is the real dependencies that we have between what goes on in land and the effect on ocean biodiversity. And the two are very closely linked. The ocean absorbs 25% of anthropogenic emissions from the atmosphere, which primarily come from land-based industries. The ocean provides food for 3 billion people. And while, as we heard, the aquaculture and wild-caught fishery industries are often missed out from the notion of green sectors, green instruments or opportunities. I think compared to traditional green and climate finance approaches, there are new dimensions and interdependencies that financial institutions need to consider. Peter mentioned coral reefs. If we think of coral reefs or mangroves, I think in a first step, financial institutions understand as they link to tourism. They are a risk buffer for tourism activities. But I think once you start to go deeper and you understand around coastal protection, lowering the risk of all coastal settlements and infrastructure from sea level rise and storm surges, there's a lot of value there. How carbon reefs act as carbon sinks, coral reefs, how they act as carbon sinks, how they act as nursing grounds for fish affecting food supplies in communities. This stuff, maybe it's theory. Within financial practice, we don't yet have the ability to make the interlinkages to see where the value and the risks lie. So as we all know, lots of progress happening in the green finance space. We don't have to reinvent the wheel. I think what's critically important, and Ingrid, you spoke to this, that and from the investor perspective, they really are looking for the proper mix of policies, regulatory regulations, and incentives to be in place. The blue economy cannot be the Wild West. We need some sense of order. We need the notion that there are resources to be managed. There are risks to be understood and disclosed. And of course, there are opportunities. But I think to be able to develop those opportunities and to be able to align our full engagement with the blue economy, we need the mix of knowledge, regulation, incentive, and essentially a really effective partnership between the private finance community, the development banks, and governments and civil society, so that we don't go forward blind, tripping over each other, but actually we can help build out this new economy together. Thank you. Back to you, Anthony.
Thanks a lot, Eric, and it's very interesting to hear of your perspectives on the links between blue and green finance, and I'm particularly struck by the multifaceted nature of many of the ocean attributes or the ocean assets. You highlighted mangroves and coral reefs. They're not just about one use, they're about multiple use, and trying to get that into a financing framework and how to make revenue streams sustainable around that. is, I think, one of the key challenges we have going forward. And underpinning that, of course, is the regulatory framework, the enabling framework, which is the jargon for the finance community. So I think we can come back to some of those because there's some very strong links to the earlier panelists. Let me now turn to Chip Cunliffe, who is the Director for Sustainable Development with AXA. And the insurance industry has been at the forefront of a lot of the green finance discussions. This is because they're faced with increasing uncertainty when it comes to environmental risk. AXA launched its Ocean Risk Initiative in 2017, which focuses on demonstrating the tremendous role the insurance industry can play in fostering more sustainable use of the ocean. So Chip, what do you see as the key barriers to investment in sustainable ocean finance activities?
Anthony, thank you very much, and thank you for inviting me to sit on this panel. I think when we're talking about sort of sustainable ocean finance activities, it's pretty broad. I think that, well, as were others actually on the panel in Abu Dhabi, what was it, March last year, 2019. And there was a panel on ocean finance again. And I think the only things that were mentioned were wind farms and fisheries, maybe oil and gas as well, but not much else. And I think that there's a real need to widen the focus here. And so part of what we're doing with the initiative is very much sort of looking at how we build resilience to the impacts of ocean risk and the role that nature-based solutions play in really becoming that stepping stone for building resilience in emerging economies and small and developing states. I do have, amazingly, a copy of your Ocean Economy in 2030 report here from a couple of years ago, and I had a quick flick through that this morning and just double checking whether nature-based solutions were sort of included as part of the Ocean Economy in 2030. And from what I can see, it wasn't. I know that you've obviously updated with various other things in terms of the blue economy more recently. But I think it's interesting that, you know, we still see that, as Eric has mentioned, as Ingrid's mentioned, as Vidar has mentioned as well, you know, reefs, mangroves and other coastal natural capital are critical. And, you know, from a point of view of reducing disaster impacts, certainly cutting the cost of response, as well as building economic, social and ecological resilience at the same time. I mean, there's a figure out there that estimates that developing countries will need upwards of $140 billion annually by 2050 in additional finance to help them adapt to the impacts of ocean risk, and yet, you know, there's a financing gap of $100 billion a year, so fairly significant. And you know, as part of that, nature-based solutions are recognised or being increasingly recognised, but you know, still often overlooked, as we know, or possibly underappreciated in policy decisions and investment, and indeed, you know, from an insurance industry and risk management frameworks as well. And so, what Ingrid was talking about, and Eric as well, you know, in terms of driving the private sector and blended finance, we need to you know, into that space. And I think, you know, some of the barriers that you're asking about are again have been highlighted by my fellow panelists. So, you know, a lack of understanding of how investing in natural capital can provide a return. You know, it's a very nascent area. I think there's some interesting and great projects out there, but there's also a limited pipeline of projects that are risk adjusted and investable. And you know, so there is you know the blue bonds and the debt swaps and there's the blue carbon and resilience credits and maybe a couple of other, you know, coral reef insurance products. But actually, you know, that's four or five, and you can count that on the fingers of one hand. So we need to drive that pipeline, and you know, one of the things that we're doing at AXA is co-chairing the Ocean Risk and Resilience Action Alliance, which is really a multi-sectoral approach to driving and identifying new projects. I think there's certainly from our side insufficient data and modelling capabilities So really for investors to be able to quantify ocean-derived risk and where to put their money. And I think that there's also that piece about, the need for investment returns to be available in a fairly short time period too. So from that side, I think that, and I know Ingrid talked about patient capital, there is a need for that patience as we start to develop, that pipeline of products. And then I think, just reiterating again on the last piece about, the enabling policies. So the regulation changes and the need to shift away from investment in maybe more unsustainable infrastructure. So I think those are, I think basically I'm tend to be reiterating maybe what some others have already talked about.
Thanks a lot, Chip. And I think that's that you've certainly managed to summarise very neatly some of the challenges there. And I like the phrase you use, the turn of phrase, drive the pipeline. And that is certainly echoed in some of the interventions we've heard from others this morning so far. I might now turn to Anther Williams, and thank you very much for your patience, Anther. We do appreciate that. But Anther Williams is the head of Bloomberg Philanthropies Environment Program, and we are seeing that philanthropic organisations really are a major source of sustainable ocean finance globally. And Bloomberg Philanthropies' Vibrant Oceans Initiative, which began in 2014, is now growing, and I'm sure we're going to hear a little more about that from Anther. But I just wondered if we can ask you, Anther, just stepping back, how can philanthropic organisations like Bloomberg Philanthropies help to scale up the access to sustainable ocean finance? We've heard about the challenges. We've heard about the need for enabling environments. Heard about the need for metrics and pipelines and how to get down to the local level. But how do you see the philanthropic organisations playing a role here?
Thanks for the question, and thanks to the other panelists. I think I'm wanting to clap along to a lot of the comments that have been made already. Philanthropy can play a super important role in protecting and promoting the livelihoods of the local communities that depend on ocean resources for their livelihoods and nutrition. And I think philanthropy, we've seen, can be super catalytic in piloting local approaches that then can be scaled up by governments or the private sector. For a lot of people, it's surprising to learn that less than 1% of global philanthropy goes into protecting the world's ocean, despite the fact that, as has been said, the ocean covers 2/3 of the world's surface. It provides food and livelihood for 3 billion people around the world, is a primary source of nutrition for 1 billion people, and provides the oxygen for literally every other breath that we take. So it's clearly fundamental, but important to note that there's a business case for protecting the ocean too. Those here have mentioned the excellent high-level panel and their reports on blue recovery, but they note the 31 million direct jobs that are provided from work in and on the oceans, and the $1.5 trillion in added value to the global economy from ocean. So the business case is there. And when we at Bloomberg Philanthropies came into our oceans work, we really thought about, okay, what are the leading drivers and the key issues to work on. We've mentioned climate change. We do a lot of work globally on climate change. That, of course, is the existential threat to the oceans. But if you look at the other problems in terms of fisheries, pollution, habitat destruction, those are the main drivers. And so we went into the fisheries work because our mission is to ensure better, longer lives for the greatest number of people. And so getting involved in work to sustainably manage fisheries and protect them was a bit of a no-brainer. And we thought about it as kind of three key pillars of work. One is the policy advocacy with national governments that can really create, as has been said here, the enabling environment for a lot of work. But second is the work at the local level with local communities to both agree to local fisheries management, but also importantly, the enforcement of their locally protected areas. And then finally, actually piloted some local approaches to driving private capital, some new models into sustainable fisheries in those local communities. And that was just a really clear gap and need, because if you think about the fishing pressure that's happening, a lot of people don't know that half the fish that are caught at the, from what we call artisanal fishers at the local level. That's a lot of fishing pressure. And when they're faced with poverty, declining catch, more effort put into catching each fish, there's a lot that you can do to increase value at the local level by providing cold storage, for example, or better ports and processing infrastructure. And so we saw those opportunities. And in fact, in the wake of some of the natural disasters like hurricanes in the Philippines, we in fact saw that some of the first infrastructure that communities went back and rebuilt were the actual towers for going in and enforcing, monitoring and enforcing their local marine protected area, because it had quickly become such an important source of food and livelihood. And similarly, in the current challenging environment that we're facing with COVID and economic recessions, we've observed that places where at the local level they were already empowered to manage their coastal resources, they've done better at organizing themselves and guaranteeing food security. For example, in traditional management systems in French Polynesia is just one recent example. So there's a lot more to say. I'll leave it there, but just close with one thought, because you sort of asked about the connections to climate change, and I think there's a lot to learn, a lot of lessons to take from the work on climate change, and on both issues. We're faced with an incredibly difficult time. I mean, we're gathered here at a very difficult time. With the COVID crisis, the recession, in a lot of places, a reckoning around racial justice and inequality, and of course, climate change making natural disasters, more extreme, more frequent, and worse. And so I think some of the work that's been mentioned here to think about how investments in the blue economy can feature prominently in economic recovery are super important. And from our perspective, the addition of some of this work to properly manage wild fisheries is super important for both protecting the oceans and for livelihood. And I just have to go back to where we started with Dr. Safri and his comments about some of the excellent work in Indonesia. I think we've been really pleased to partner with the ministry on some of the climate change efforts there, and just seeing the importance of that critical local leadership, where we can pilot some things around, for example, solar panels on local airports, and then that can be expanded and grow to airports around the country. Those kind of partnerships, again, just taking some of the lessons from the work that's been done at the local level on climate change, can really be expanded. But Dr. Safri and the ministry's work there has been really critical and pretty inspiring as well. Thanks.
Thanks a lot, Anther, and it's a good note to end your intervention, your initial intervention there on in linking back to the local level, and you had a phrase in there, local empowerment, which I think certainly resonates, and trying to ensure that there are sustainable interventions that can then be replicated and taken up by other communities. And that, in fact, reflects what Ingrid was saying about the need to ensure that the kind of finance and instruments flow down to the local level. So there's as part of the network, the ecosystem of finance, trying to get that finance to the right level is key. So thanks everyone for their initial round of interventions. There's certainly some strong themes that came out there, and I was wondering if we could pick up on one or two of them in a bit more detail, perhaps. And maybe if I could circle back to Dr. Safri to start with. The issue of planning has come up a lot. The need to ensure there's a project pipeline, there's stability in the regulations, trying to ensure there's a good enabling environment. How has Indonesia been trying to address that, and what lessons would you say there are for other countries in this regard? Dr. Safri, you're muted.
Thank you, yes, Anthony. Thank you. So we understood that we have the problem in what you call how to manage in a sustainable way. So why every panels agree how we sustainable ecosystem in what we call it to serve this to all the country. So why now we emphasize our new program, we call it Ocean Prosperity. We call it Lautan Sejahtera. This ocean prosperity is we will emphasize what you call it here is about ecosystem approach for fisheries management. So when we call it fisheries management, that now some of the area they make it is not in the what you call it sustainable way. So why we want to emphasize most of it is in Eastern Indonesia. We have to wait first how to make a resilient fish stock. This is important. How to make a resilient fish stock is mean we have to make the strengthened data collection system. We lack of the what you call it the strengthened data collection. This is important. So why we integrated all the data, all the institutions to do the same thing. And the second is how to make the resilient communities, not just data but communities. Communities is mean how to first enhance the value of marine product. That you can understand the tuna in Indonesian price it's different price in Philippines and different price in what's called in Japan, of course. Why? Because the way they trade the tuna is not the same. So why we have to teach them how they trade and become the value is their value added. And the third is of course is how about the resilience of ecosystem. This is the type we call it what's called it the ocean prosperity. This is the concept that we started since 2 years ago. Then we start this year. It's already mentioned in our planning, in national planning. So we will we are in discussion now to get some fund, of course, there's some fund from ADB and from World Bank. This is under discussion. Just this morning, just today, there's discussion with Minister Luhut and the World Banks. And I think we will follow up. Then we will ask also, because this is for all the countries, so we'll ask spatial, like some what you call it a blue bond. That the blue bond may give some, of course, this is important for the whole country, not like commercial bond. This is we ask them. Thank you, Anthony.
Thanks, Dr. Safri. You've raised the question of blue bonds, and in fact, in our questions that are coming from the audience that's online, the issue of blue bonds has featured quite prominently. So it's a question to the panel as a whole. How do you see the future of blue bonds? And there's a few dimensions there. One is, can blue bonds be applied to wild fisheries? How do what do we learn from the existing green bond world? And are blue bonds just a special category of green bonds? It's an open question to the panel. Would anyone like to tackle that? I know, Ingrid, you mentioned blue bonds specifically, and maybe there are others who might want to have a crack at that one.
Maybe I can start. It's also slightly an answer to the green bonds versus the blue bonds. In the green world, we have one common currency. It's called CO2 equivalency. And deals are compared and transactions are made based on that currency. And there's a carbon trading market where people trade with each other. In the blue space, we're not that far yet. We don't have that currency. And in the blue space, it's much wider. So some projects will have an impact on climate change, for example, offshore wind and solar. But other projects might have a non-measurable indirect impact or no impact at all. So it depends on the project. So yes, blue will be a subcategory of green, but it might not be always having an impact on climate change. Now, on the definition of blue bonds and what is in there, I think the first step we made as an organization is putting that ocean finance framework in place. And that framework will be the foundation of the definition of the blue bonds. Because like in a green system, you need to start accounting for and measuring the impact of each transaction. Now, in the green system, it's relatively simple. You look at CO2 and CO2 equivalency. It's a bit more complicated, but that's a major driver. There is not such a common driver in the blue bond world, in the blue projects. So that's why it will be more complicated and more diversified in that sense. I'll leave it here for the moment.
Thanks, Ingrid. Maybe Chip, you mentioned, you raised the issue of nature-based solutions, and Eric as well. Can we use blue bonds to drive investment in nature-based solutions? Eric, do you want to tackle that one first, or Chip, whoever?
I don't mind.
Off you go, Chip.
Okay, I've spoken. I think it can. In fact, we're just looking at developing potentially a coastal resilience bond at the moment, and the idea is that that could be we go to the private sector, potentially the hospitality sector. Of course, is not looking too great at the moment for anybody in the hospitality sector, but looking at driving that to ensure and enable funding for the maintenance and restoration of mangroves and/or coral reefs from a resilience perspective along the coastlines. I mean, just going back to what Ingrid was saying, I think that I don't think there necessarily needs to be a separate blue bond. I think that what we're looking at there with that coastal resilience bond is using the green bond principles. Having to I mean, and given that is now and the green bond market is doing so well, that we didn't think there was much point in trying to develop a new market with different principles. But yes, to your question.
Eric, do you want to?
Yeah, I mean, just to add, maybe to state the obvious a little bit, that probably functionally what we're talking about is not blue bonds, but bluer bonds. Learning from the green bond market, as it develops, there are some activities that are stated green, but if we really want to green the entire economy, we actually need to work with dirtier parts of the economy to transition it. And I think the same on the ocean side. And this also, I think, applies to different countries. Some, I think, they'll see the notion potentially of blue bonds as something that maybe some countries can do, but others can't. And I think of notions like circular economy, that makes some countries somewhat uncomfortable, but they're fine with circularity. So the notion of working towards improving a process, yes, we agree, but it doesn't mean you have to only talk about the end state.
Well, actually, that's a good point, Eric. There's a lot of discussion to be had around the terminology that's used, and I'm reminded of the EU's approach to the sustainable finance taxonomy, and that is starting to get into the blue finance space, and I think that'll be a development that we will be very interested to see how that takes off. One of the other kind of an allied question which came up in the questions from the audience was around this issue that we have seen a lot of effort being put into ESG investing, environment, social governance investing. Can we see ESG being a positive force for ocean sustainability? And there are concerns in here about ESG investing being a potential bit of greenwashing. concerns over how sustainable these ENG investing funds really are. Is this something that is of interest to the finance world? In how applicable is ocean sustainability to ESG investing? Would anyone care to venture a thought on that? Ingrid, please.
What I think that ESG is doing for asset managers and for the financial world is putting a focus on sustainable development and on the environment, which I think is very positive and very good. It's reflecting the voice of the public. However, having said that, I would encourage the rating agencies, the credit rating agencies, who are currently already looking at climate risk, but also take account and really look into SDG 14 and the impact of an organization, not just on the terrestrial area, but also the impact of organizations, capital market players, and borrowers on the oceans. And I up to date, I haven't seen much proof of that. I'm sure it's happening, and of course it's under development, but I would strongly encourage rating agencies as well as EEGs look at sustainability with regard to the oceans that go beyond the terrestrial assessment.
I think that's a familiar challenge, actually, trying to go beyond the land-based. Vidar, you wanted to jump in on this one?
I would think, I mean, we've touched a lot on, and I did as well, on the environmental win-wins in environmental and business terms by investing in the ocean. But when you raise the issue of the ESG framework, we should also not forget that many of the ocean industries have significant human rights issues. So it's not only the E that is relevant to the ESG and the ocean. And I think more attention from investors on the full, all the letters in the ESG could also be good in terms of putting pressure on ocean industry actors, but also on governments to put in place better governance frameworks.
A really good point, Vidar. And in fact, that echoes some of the points that Anther was making. And maybe if I could bring you back in on this, Anther, the whole range of dimensions of environment, social, and governance seems to be one of the things that's driving Bloomberg Philanthropies. What does Bloomberg need from policymakers, from governments to try and ensure that this full range of aspects is taken into account? What would your ask be of governments in the countries that you're working in?
Yeah, it's a good question. I just want to briefly add on to Vidar's comments on this, which is the other key component on the investing side is data and transparency, which is super important to Bloomberg and the core of the Bloomberg LP approach in the financial markets. And so I think some of the new tools that have been piloted in terms of projects like Global Fishing Watch, which we have been very pleased to support, is an effort that provides data on the ships that are actually out fishing, and using satellite data and radio signals can actually monitor where boats are going, and based on how they're moving can tell often if they're engaged in illegal activity. And that's information that we've then gotten onto the Bloomberg terminal to provide additional visibility for investors. So I think that's just one example, but I think the addition of more data and transparency as we're seeing this revolution both in low-cost technology but also data and analytics provides a real opportunity for investments in oceans protection. To your question about what we want to see from policymakers, it's interesting. It brings me back to just the connections between some of our climate work and our work to protect oceans. And I think often for people in the climate change world, the sort of technical aspects can just be sort of confusing and prohibitive. We certainly see that for new philanthropists that we work with, for example. It feels like you have to have this deep technical understanding to get involved. And I think a similar thing kind of happens with oceans. It just feels vast, obviously by definition, and there's a lot of kind of technical barriers to entry. I mean, I guess the key point for me and for us is that while of course there's complications in any sector, what we actually need to do to solve some of these problems, and for example, promote sustainable fisheries is really just a couple key policy changes that governments can make. One is to stop investing in the stuff that we don't want to see in terms of offering subsidies to industrial overfishing as one example, or seabed mining. Invest instead in the stuff that we want. Second is to, and again, back to the Indonesia example, Dr. Safri mentioned this, but set science-based limits on how much fish can be caught, base it on the science and not on the politics. And third, again, on the fisheries side, ban the most destructive fishing practices. If we're not using bottom trawling or dynamite fishing at the local level or some of these other very destructive practices, and we're actually enforcing those, that can make quite a big difference. So I guess it's just to say, we don't have to do everything everywhere. There's a few key policy interventions that governments can make. And the last thing I'll say is it's worth remembering that, just 10 countries and the EU catch about 90% of the fish in the world. So you don't actually have to go everywhere. And there's quite a lot that national governments within the boundaries of their own exclusive economic zones can do to protect the oceans and stop overfishing.
Thanks a lot, Anther. I might pitch that question a little more broadly. Dr. Safri, you wanted to jump in on that.
Yes, I just to let you know, because this morning, our government, Mr. Luth, just launching of the what you call it restoration of 150 hectare the coral reef, and then he announced also for restoration 600,000 mangrove. This is a part of our responsibility. We understand also our mangrove, about 1 million is in the poor condition, so we make it 600,000 hectares. This is their program. Said we put some budget, especially the environment, social government. They our responsibility for this one. Thank you.
So that's hot off the press then, is it, Dr. Safri? You said it just announced this morning. Oh.
Just this morning.
Breaking news. That's great. That's great to hear. Very encouraging. Ingrid, did you want to jump in on that question as well? No? Okay. Oh, Eric. No, sorry. I thought you waved your hand there. One of the things that has come up from all the panelists and from one of the questions online is this issue about metrics and measurement. It goes right to the heart of the points that Ingrid was making, that Anther was making, and the need for transparency and reliability around the data, indicators, metrics. Groups like AXA, Chip. I mean, you guys are deep into the data question. What do you see as the kind of the next big steps for us in trying to make sure that the data can support a move towards more sustainable blue finance?
Yeah, thanks, Anthony. I think that there are various things that we're working on at the moment, which are new, and I think that very much about the data piece. For the first time, we're developing a coastal risk index for the first time to integrate healthy ecosystems into flood risk models. So the degradation of those ecosystems, mangroves and reefs, and what that will mean from a flood risk perspective. So physical risk, and then what that will also mean from a fiscal and social vulnerability perspective as well. So, that for us is becoming sort of really interesting. And for the first time, we'll be able to integrate that into our risk models. I think that's key. There's a second piece. I'm just going to pick up on what Anther was talking about on IUU, and there's some work that we're just starting at the moment through Aura. On how the insurance industry can provide support to actively prevent IUU. So vessels tend to be insured in fleets. And so what we're trying to do is to determine and provide underwriters really with the tools that they require and the data they require to be able to identify IUU fishing vessels quickly and obviously efficiently. And that, obviously is going to look at providing, disassociating ourselves with those who are involved in IUU. But of course, from another point of view, we're looking at our own liability and reputation as well. And then the final piece, I think, relating to data is about how the insurance perspectives on natural capital. So we have a new study being that will come out in probably the week after next on mangrove insurance. So we're looking at flood hazard reduction benefits provided by mangroves in the Caribbean, and then using a cost-benefit analysis of restoration of those mangroves and in the regions and countries where we can do that, and then the use of insurance to pay for that restoration. Again, all this requires data and a lot of it, but we're really keen to utilize that and work with others to help develop those models and to understand the future risk landscape.
Eric, wondering if you could jump in on that data question.
Well, actually, I just want to go a little bit broader and building on what Chip has said, because I think he's pointed out a very important issue, is within the financial sector, we talk a lot about the capital markets and actions they need to take. For instance, divesting from coal. I think we need to remember that in many parts of the economy, including the blue economy, it's actually not liquid public equities that are playing often an influential role. And IUU fishing is a perfect example because many fishing fleets, they don't have institutional investors behind them. And therefore, investors might be a little bit stripped of their ability to influence that specific outcome, but you need insurance to run a fishing fleet. So I think a lot of what we've learned in green finance, including engaging with companies, we need to get beyond just the role of investors, but the role of insurers and banks, and working with a lot of these industries that are essentially gray or dirty, and how do we engage with them to move in the right direction? I mean, an example, once again, between if you're a company who's in trouble, essentially if you're in an industry that's going down, like coal, you actually don't care about your shareholders any longer. It's your debt holders who are the ones that really have influence on you. It's your insurers who allow you the license to operate. And so I think when we look at the blue economy, we really need to throw the net wide to say, who are all the financial actors who need to start playing a role? And exactly the types of things that Chip was talking about are really critically important. Insurance is what's needed to have this economic activity operate. And therefore, insurance can have a really big role in helping it shift to obviously bluer economy outcomes.
Very good points, Eric, and I saw lots of nodding from the panelists. One of the things that we haven't heard so much about today is that word that you used, Eric, and that was about transition. When we talk about the climate world, we talk about the transition to a low carbon economy. We haven't heard so much about the transition to a sustainable blue economy, but it's the transition part which is key. And I was struck by the comments from several of you, Anther and Ingrid in particular, about the need to go to the local level to bring communities along. I was wondering if I could circle back to you, Vidar. How is the high-level panel and a double-hander from Peter, and then we go to Vidar. I might just ask how the high-level panel is handling the local level engagement. But Peter, you had a two-hander first.
Yeah, and it's been a fantastic discussion on this. I'm really picking up so many points, but I started out in rural development, building seawalls, digging pit latrines, building community halls, that sort of stuff. And it's, mainly your local labor and local ideas and so on, muscle power. But occasionally you need some money to buy the rebar and the cement. And it was always so difficult to get. And the refrain that I've heard from that day right up to the time that I was president of UNDP is, we've got the money, but you guys haven't got the projects. And for, somebody who's got dirt on their hands, that is such a frustrating thing to hear all your life. So I guess I'm directing the question first at Ingrid, I think, is, the block, and you hear it all over the place, that where are the projects? So we know that there are 10,000 coastal towns in the Asia Pacific region that need sewerage schemes. And, we're talking there about local authorities. So what seems to be missing is the people that know how to write up the projects to satisfy the financiers, right? Now, small developing countries, even big developing countries, they just don't have enough specialists to do that. There might be a couple of bright young men and women sitting in the central planning office who can do that, but not enough of them. And certainly not sitting in those small towns that I'm talking about that need that money to put in those sewage schemes and wastewater infrastructure. So my question is, who's going to provide them? Is this something that can be included in the financing package, in that 4 billion, for example, that Asia Pacific, that the Asian Development Bank is putting forward? That would be my question, and answer from anybody, please.
And given we have just 5 minutes left, and this is a critical question that Peter's posed, why don't we finish up our panel today with everyone answering that question and focusing on how we can spend the money. And I might, although you asked Ingrid, Peter, I might just start with Vida and then go to Ingrid to focus on this question to wrap us up.
I was just preparing how to respond to your question about the local level, but they're obviously related.
Very related, very related.
I will not present the conclusions of the panel work, but in the research process and in our discussions, we've had a lot of emphasis on the local level. What's in it? How can we ensure that the ocean economy creates prosperity for coastal communities and communities on land? And we will be touching on ocean literacy issues, ocean equity issues, and not least, going back to my initial point about planning. The planning process needs to be inclusive of all segments of society. And that's the starting point if you are to end up with ocean equity. And I think the data revolution, the accessibility of data, the increased transparency opportunities are really coming in handy in that approach of empowering the local community.
Thank you. Ingrid.
Yes, I don't need to. I was looking for a mute button, but it's not applicable, which is very nice. Yes, I think that there's two reasons. We've heard so many times, there are so many projects. There are so many projects and people looking for funds that are not available. On the other hand, there are financiers looking for projects and they cannot find them. What's the matching game? Where I think the matching goes wrong is where people sit and the sizing of the deals. Because a transaction that needs 100,000, there is not the big financier sitting there wanting to blue and impact financing. That might not be a fit. And how do they find each other? So I think on the financing, what would work is the aggregate vehicles. So like aggregation up to a level to a sovereign or regional blue fund that can actually accommodate and that is supported by people who understand finance, who understand business plan, but also have a good knowledge and expertise of the local circumstances. Because something that might work very well in location A might, for different reasons, not work very well in location B. So that's on the financing and the expertise of financing dribbling down. People come to that, can come maybe via a regional intermediary, or we can provide technical assistance for consultants in between, that the business ideas bubble up, are written up in a way that financiers understand and can or cannot be approved by the central committee. The second way of tackling it is by doing demonstration projects. By setting up and financing small demonstration projects, then other areas which have similar issues can come and visit the demonstration project and can actually think about it, improve on the theme, or do something similar. And then as a third point, it's the sharing of knowledge, was already mentioned. I think, if anything, what COVID has done for us is boosting the digital connectivity and boosting and emphasizing digital technology and communication, how we can easier share information than before. That can be done, again, with experts, partly funded by technical assistance.
Thanks, Ingrid. Aggregation, demonstration, knowledge sharing. Very good points. Chip, and then Eric, and then Anther and Safri. If we all have 30 seconds for a quick intervention, then I think we need to wrap up.
Yeah, no worries. Peter, I think that well, it's exactly why Aura has been set up, is that sort of multi-sectoral approach to identifying and scaling pilots that drive investment into this space. So we have a mission of $500 million into that nature-based solutions space by 2030. The Canadians have funded the first for this year, and we have 6 projects identified already that will start. And we're working on the ground with the likes of WWF and CI and TNC and IDB for technical assistance. And so really, I think Aura is very much about almost doing exactly what you've asked. So we're happy to provide you an update on Aura soon.
Thumbs up from Peter, and I think you will be getting a call. Eric.
Thanks. I think a topic we would speak to is we have to remember, in terms of the institutional capacity or the knowledge, obviously it's needed within governments, within project developers. It's also needed within the financial system. And we have to recognize, I think, one of the challenges that commercial finance institutions have, they're not nearly as centralized as a development bank like ADB or EIB is. And therefore, how you get the knowledge out to the different departments is much more challenging. And I guess the final ask is, development banks have a very important role to play, I think, in filling gaps, but also working with the commercial financial sector in building those capacities. Bring them along with, get them comfortable with these deals, and they're going to help build them out over time. Thanks.
Thanks, Eric. Anther, turn to you for some thoughts on this one.
I'll just underscore a couple things that have been said that I agree with. I think an important solution here is the demonstration projects, and the idea that the transaction costs are high for figuring out a project or a solution the first time, much lower the second, third, 30th time that you're doing that. So those are super important, and stealing and spreading the best ideas is an approach that we've seen work. And then second, to this issue of municipalities, a ton of the action here that we see is happening on the local level. As one example, there's more than 400 mayors across the Philippines who are working together on local fisheries management reform. And so figuring out this connection between that strong political will, the technical support, the philanthropic and private capital that can help advance their solutions, we see as a real winning approach. Thanks.
Thanks, Anther. And Dr. Safri, your thoughts on Peter's challenge?
So I think we need what you call it to explore the global finance opportunity, especially in like archipelagic country like us. Why we said we need the assessment, of course, assess the global finance background paper, and then we also to see the reflection engagement. It's mean the blue finance policy paper and blue finance advisor panel. This is underway at the moment. Then how to implement this one? It's mean the financing mechanism established, and of course the investment of the program. I agree what the Ingrid says, that every expertise is totally not the same in the location A or B. So why this is important? Maybe Indonesia not the same with the other country, but I think this is the good panel that we can understand. We can ask also your advice how what we can do for the best thing, how to make it our ocean is give us the prosperity. Thank you.
Thank you very much, Dr. Safri. So, colleagues, viewers, we have run over time a little bit, and it says in my run sheet that I'm supposed to provide a wrap-up, but I think the discussion has been so rich and varied that it will be impossible for me to do justice. And it just remains for me to thank our panelists, Peter Thompson, Chip Cunliffe, Safri Buranadin, Ingrid Van Wees, Anther Williams, Vidar Helgeson and Eric Usher for taking the time to talk with us this afternoon about how we can drive finance for a sustainable ocean. We had, I'm told by our colleagues by the team behind that we had over 200, around 230, 250 people joining us online. It exceeds the original number of people who registered. So I hope that the viewers at home have enjoyed the discussion and have provided plenty of food for thought. We do have a slide, I believe, Zach, which you'll put up, which has some links to some papers that we've mentioned during the morning, during the session. With that, once that's up, well, that's one of the papers. That's the paper that we launched today, Reframing Finance and Investment for a Sustainable Ocean Economy. So, colleagues, thank you so much for joining us this afternoon, and I wish you all the very best for the rest of the day, morning or evening, wherever you are. And thanks again to all the viewers for joining us. Thank you very much.